With the property market heated to a whole new level, FOMO kicking in, interest rates at record lows, I want to discuss how we should be navigating through this property market safely, whether it's buying an investment property or your own home. I'm going to show you exactly how in this video. Hey guys, my name's Ravi Sharma and I'm the founder and buyer's agent here at Search Property. Thank you so much for joining me on yet another episode of Search Property TV. If you're new here, smash that subscribe button because you want to be kept up to date with time-sensitive information about the property market, about Australian economy, and of course, personal finance. Now, for the YouTube algorithm, we need to smash that like button, especially if you like this content. We want to show people more of this type of content, so it would go a long way into supporting the channel. Australian property investors must navigate fast-moving and novel dynamics as the market kicks back into gear after the COVID-19 slump. While the market remains unpredictable, there are several defining trends set to shape the 2021 property landscape, both from a purchasing and selling standpoint. Now guys, I actually made a prediction or a few predictions about what I thought property was going to do this year. So definitely go check out that video. There should be a link in the description or a card that pops up here. But essentially, I'm talking about what I think is going to happen. And I was saying this 9 months ago. If you're a loyal follower and have been following my channel for a while, you'll know what I was saying 6 months ago. If you're new to the channel, welcome, but definitely go check out those older videos where I was starting to talk about the dynamics of what post-COVID would look like for the Australian property market. Now, it was fairly evident late last year that the Australian government was going to support the property market. It doesn't matter why, but they were. And so essentially understanding that allowed me to understand what was going to happen this year. Now, no one could have predicted how we go from 12 months ago, economists coming out and saying 30% drops in market values and, the property market's going to collapse, to now having chats around RBA coming out and saying that we could grow by 30% over the next 3 years. Now, again, something I want you to take caution to is that that doesn't apply to every single suburb. So just having a property and thinking, oh, well, maybe I just won't sell right now, I'll sell in 3 years' time because my property is going to go up in value, is the wrong way to approach it. You really need to understand why someone wants to live in that suburb. And it goes beyond just living close to a train station or there's a new hospital. Those are just factors. You need to really rely on supply and demand. So when we're going through navigating through this property market, we just don't want to run into, buying the first property we see on realestate.com. Although it can feel like a very frustrating process that we just want to go and buy something, you need to be careful. And in times like this, you could end up finding that people that couldn't sell their homes because they had issues with the homes are pretty much putting it on the market, hoping that someone comes in, swoops in and think they're getting a good deal. But in reality, they're actually picking up a dud investment. So it's one of those things we need to keep an eye out for. To gain the perspective of the recent market turbulence, we only need to look back in mid-2020. Market sentiment looked hit, but bounced back quickly, resulting in ANZ revising its mid-year national 2021 housing forecast from a 10% drop to a 9% increase in a matter of months. Meanwhile, momentum has continued to build, with Westpac's house price predictions rising 1.1% for January, and the bank's economists predicting a 15% national price surge from 2021 to 2023. Guys, national property boom. I was saying it on the channel and I got so many dislikes that look at this guy, he's just pumping up, the Australian economy and nothing can fail. And then there's other channels saying the complete opposite, and it's played out. It's one of those things that it really does rely on just more than reading these headlines that come up. And, we can see mainstream media is now pumping this stuff. They are saying, look at how much property prices are going up and you're gonna miss out. Now, I've never come on the channel and said, hey, you're gonna miss out and there's the fear of missing out. I'm just saying you need to be more careful in this market. It's so easy to get caught up in the hype. When 2017 you had the cryptocurrency and everyone was like, oh my God, you should totally get into all these altcoins and Bitcoin and Ethereum because, hey, look, the market's booming. You should just get in, you'll make quick money. That is the sure way to lose money. And it doesn't matter what you're in, whether it's cryptocurrency or the Australian real estate market. There are literally people coming out and saying, well, I want to get into property, ride this wave for the next 2 years and then sell. That doesn't make any sense. Australian real estate in itself was never meant to be an investment choice. It was meant to be for housing and shelter. Then it became an investment choice. Now, I've got nothing against it. Of course, I've got investments myself, but that's playing the system. If the system allows it, unless you're going to do it, someone else will, and then you get priced out. And so you need to take care of your own family and food on your table versus hearing all the negative shit, right? So when it comes to how to navigate during this time, you've really got to ask yourself, is it worthwhile actually paying 10 to 20% above market value that only existed, say, 6 months ago, to now secure something really quickly, but then realize that even if the market grows by another 10% over the next year, you're not going to realize any of that because you paid premium dollar back then. Now, obviously, if this momentum continues, the new market value gets established. In 6 months' time, we're going to have all that lag data come back through and get published. Now, then people realize, wait, hold up, the market prices have actually gone up by 10, 15, 20%. Now, when I say those numbers, I don't want you to take them lightly. We've seen an average growth of, 4 to 5% in most regional markets. Some capital cities like Sydney and Melbourne, if you look at the last 10 years, 20 years, maybe it's 7 to 9%. But in reality, what we're seeing here is not just price growth. We are seeing the dollar, the fiat currency dying. And that is why we are seeing house prices go up, because the purchasing power of our dollar is losing value. I talk about this a lot on my channel. You should definitely get educated. I've got an online course as well. You definitely should check it out. If you are new to investing or wanting to buy your home this year, it has never been a more important time to really get educated. Not just, figuring out what loan to get. We cover that, but it's about mindset. Why are you wanting to buy? Why are you trying to invest? And this is the questions that I ask on strategy sessions, and most people don't have an answer. They're like, well, I just want to make money and, passive income because that's what everyone wants to do. It's got to go beyond that. And that's why if you don't have a proper strategy, you're going to get burnt in this market, and you're not going to find out until, 2 to 3 years down the track, when then you realize, holy shit, this happened before and happened in Sydney and Melbourne in 2017. I need to get really clear with my strategy, with the roadmap that I want to take, and why I'm purchasing these properties. Let's continue. The nature of the COVID-19 economic downturn has meant many high-income professionals have remained largely unscathed compared to the lower end of the market. Typical property investors in the higher income bracket, such as the corporate sector, were able to transfer their roles to working from home, protecting their income and in many ways bolstering savings given the reduced spending options amid lockdowns. Guys, look at the widening gap, or the wealth gap in the US. We are going to see that here as well. As much as the government wants to come out and go, band-aid approach this, and people don't want to actually look at the reality of this, the truth is the rich are getting richer and the poor are getting poorer. Why? Because we're seeing asset price inflation. Now, the rich people are going out, they've got high incomes and they've saved a lot, and now they're going in and they're investing. They're buying up assets, right? And they're attaching debt to it. Now, when we have inflationary periods, we're going to see that debt become irrelevant with inflation because everything becomes more expensive. And then we're going to ultimately see that trickle down into the, household goods. And then, of course, we're going to see it in incomes as well because companies are making more. The government's, printing money out of thin air now. And so that is going to just put a further burden on the lower end of the market, the poor in this scenario. And that really does screw over some people. And that's why I say get educated, because if you fall into the bottom half of that sector, whether I talk about it or not, it's happening. And so now if you're in that bottom half of the sector, even if you're in the middle somewhere and you're unsure, it's time to get educated, because the next 3 years, we're going to see so much inflation into this system that we're going to want interest rates to come into play and hike up so that we can get some of those guys that are at the top end to get priced out. Now that the market is returning to normal, high income earners with extra savings are being presented with a prime opportunity to invest in property. This is likely increased prices and competition as the year progresses. So while buyers must remain prudent with asset selection, if the opportunity presents itself, acting sooner rather than later is the best option. Now, I do agree, it is time to act quickly, it is time to execute. But if you've been sitting on the sidelines for the last 12 months and you thought, well, you know what, 2020, dud year, 2021, everything's going to change, and I will then start my journey of education, I will then start learning about these things. It's too late. Unfortunately, there was people during the 2020 year that were getting things sorted. They were getting their finances in order. I know this for a fact because the amount of people I spoke to alone was just incredible. And there was more and more towards the end of the year because people started realizing, hold up, we need to get our shit sorted here. We need to get our finances in order. We need to get our mindset right, because if we don't, we're going to see this market come in and we're going to sweep through. And we're going to be left there trying to figure out what to do. Now, a lot of people out there are in that boat. Now, 10 to 15%, according to who I'm talking to, are actually quite switched on in the sense that they were preparing for this. They were looking at these videos and going and executing. The amount of people that were emailing back then, 6 months ago, is significantly less than what they're doing it now, right? But that could be, because of the popularity of the channel and the demand for the services. However, the questions, the constant conversations that were happening back then is what is supposed to have happened 6 months ago. Now we're having conversations where I need to get shit sorted because the market's moving and I don't know what to do. Guys, we've been planning this. This was always going to happen. And that's why we need to keep planning. Now, for those who think it's too late, I've got a video about why I don't think it's too late, why I think the property market's going to continue going up. But that doesn't mean we now go, oh shit, I better go online and buy something ASAP and talk to agents and do it. No. You need to calm down and get educated. You need to learn the specifics of the market. Because if you go out and you make the wrong decision, well, you could have made the wrong decision in a bear market, let alone a booming bull market. And so what I mean by that is, irrespective of what's happening with property prices, if you purchase well, you're going to do well in the long term. But if you purchase something out of FOMO and getting in at the wrong time into a wrong asset, you're going to have to pay back so much debt and so much time wasted in terms of potential wealth that could have been bought up and built over that time. So it's about being careful and not just jumping in because everyone else is jumping in. You don't know their situation. You don't know if they've been planning for this for the last 12 months. They're not going to tell you that. Prospective property investors should remain poised and ensure finance is organized and secured at optimal rate to maximize capacity. Meanwhile, many prospective vendors who have been understandably cautious about selling are likely to benefit from pent-up demand as the market continues to gain momentum. While high-income earners have more savings accumulated, the broader population is also set to have its spending capacity bolstered thanks to record low interest rates and the expected easing of lending restrictions with the federal government flagged last year. So something we didn't even consider is that last year when the Australian government came out and said, well, no, we need to ease lending restrictions, we need to allow credit, that was the telltale sign that this was coming. Now we're seeing that even before those restrictions have been eased. So can you imagine how many people are now going to flog into the market because, well, hold up, I can now borrow, whereas I couldn't last year. This is just going to create more competition, more demand, and when you've got more demand than supply, it doesn't matter what market you're in, it's going up. The prices are going to go up, and we're going to see, I guess, a difference in the rental market, and this is something that people aren't really talking about. What I'm seeing is rental demand, rental yields, all are going to suppress, okay? As we get into this market, we're going to see prices for property go up, and we're going to see those rental yields compress, right? Because as property prices are going up, we're not increasing those rents. Now, what we will see is sort of a balancing act. As prices go up, the rental is going to stay the same, even if it goes up by $10. But if you're seeing prices go up by, $50,000, $60,000, it's not keeping up, right? So the yields will go down. As we see that go down, you're seeing obviously your cash flow affected. But over time, what will happen is because people get priced out of these markets, we're going to see sort of a slowdown on, property price growth because all those guys that wanted to buy for the next 2-3 years, they're going to go and buy. Then what happens is it's unattainable now. So now, in order to live in that city, you're now going to have to pay rent. And so then slowly we're going to see that rent come up as well. Now, in most areas, we're not going to see that because when you see high density capital cities, and this is why I stay, mainly away from high dense areas, is what you'll see is people are okay living 5 minutes further out because they're going to get a better deal there. Now, if you're getting into the unit and apartment market, I don't know what else to tell you. If you haven't really understood why those aren't growing and why it's a shit investment in most areas, I'm not sure what to tell you. Go watch those videos. I believe in apartments. I do truly believe in them. I've got a couple myself and they've grown beyond some of the houses I've got, right? They've been producing great numbers. However, what you need to understand is supply and demand. It's basics, right? Why would you be buying in an area that has multiple cranes out there just because someone told you, well, this is the next capital city, this is the next city, within the capital city, so it's gonna have the demand. Yeah, maybe in 15, 20 years when there's no housing left, but what, you're gonna wait 15, 20 years for substantial growth? What you wanna be doing is going into areas and being a borderless investor. You need to look at other markets, and most of the time it's something that you can't do because you don't have that time. But in a time like this, where everyone is looking in one direction, we need to start looking at other suburbs, other areas, because it's going to be no time at all before these numbers in these areas are going to get registered and people are going to start looking at those areas too. I know for a fact that 6 months ago, where we were looking at areas, we can't look at them anymore because we've got 30 or 40 people coming through the first open home. Now, it's great for any clients that went and invested in those areas and whoever bought property, because now you're going to see the ride wave up. You don't want to be purchasing up here, right? You want to be purchasing down here. And I say this in a video very carefully, is that I would rather be a month early than 1 minute late. Now it's 1 minute late. So now we want to sit back and go, okay, now things are moving up. However, in saying that, we're still very early in this inflationary period. So when we're navigating through the property market, clients are still looking for properties, we're still looking for properties. It's just a matter of understanding why those properties are the ones we go for. And there's been delays in terms of how we do those selections, because we don't want to jump in and be arguing or, negotiating with a vendor or an agent when they've already got 3 offers. You already know the vendor's going to go, well, just get me the best price. The agent will go to the first guy and say, well, what's your best offer? Tell me. He's going to come back and say, okay, well, it's 350. Cool, no worries. Hey, we've got an offer on the table. It's in the mid 300s. I can't tell you what it is legally. Oh, okay, 355. Yeah, that sounds pretty good. You think you can push it a little bit more? That's their job, right? And they're gonna get that guy to get to 360, 365 because he thinks that number is higher. So then they come and go on to the third person and go, what are you willing to offer? He goes, well, I'll offer 380. I won't even do pest and building. I'll just go unconditional, let's go. How are you gonna compete with that? And that is just a stupid way of buying property. Unfortunately, that is the market at the moment. You need to be very careful. You need to be very particular. But when the opportunity comes, right, you need to be right there and then attacking, executing. So in order to do that, you need to get your finances in order. You need to get your mindset right. Hence why I say this course isn't just, hey, he's going to just talk shit for a little while. It is a course that you need to take. Because by taking it, you're really understanding why you're investing and your mindset. This isn't just about understanding, I want to buy property and this guy's going to teach me how. No. It's about understanding yourself and being self-aware as to why you want to get into those positions. This means prices, once out of reach for millions of potential home buyers, will soon be attainable, pushing up demand, competition, and in turn prices. An internal Reserve Bank of Australia document suggests there could be a 30% rise in house prices over the 3 years in relation to low interest rates. Now guys, I have a dedicated video around the RBA and what they mean by a 30% increase in 3 years. I actually think it's going to be a lot more. So, go watch that video. Obviously, I don't want to say things out of context and then, you destroy me in the comments. But I want you to go watch that, get educated and understand the context. I don't say it just because, it's my videos and you should check out my channel and, subscribe and whatnot. I'm just saying it because I don't really see anyone else doing it. And if you guys can, benefit from that information, well then use that information, right? If that happens to be on my channel, use that. If it happens to be on someone else's channel or someone else is putting out that content, go for it. But, I haven't seen it. Last year, Australia's units rental market suffered by its biggest price drop in more than 15 years because of the impact of COVID-19. Domain's rent report for the June quarter showed over the previous 3 months, the national median price for renting a unit dropped by 3.2%. Rental prices for houses fell 1.2% to record a national median price of $446 a week. Cash flow is the key here. Velocity of money. Learn it. Google it. Velocity of money is everything. When you want to build wealth, you want to start building passive income and financial freedom, you need the velocity of money to work for you. You need to understand the momentum of money. That movement of money is what allows you to build wealth. It's not about simply keeping it stored. Keeping it stored in a savings account for the last, 2 years would have yielded, 1%? It's about using that money, putting it into investments, having that work. That investment property allows you to have the cash flow, and that cash flow you could put into ETFs. You could put into cryptocurrency. You could buy collectibles, right? Or you could build towards another deposit for another home, leverage the equity, go again. That is the whole game here, guys. It's not just about looking at, look at my property, it's now worth, 200K more. Well, it means shit all because you can't retire on equity. You need to retire on cash flow. You need to retire on rent. So a combination, a balanced portfolio allows you to get that. But you're not going to get that if you don't have a plan. If you don't have a strategy, you don't understand what you're getting yourself into, you will get burnt. So if I'm looking at property and navigating in this market, I'm looking at properties not just in great areas, I'm looking at how do these properties generate good cash flow? Why are there indicators suggesting there's going to be rental demand in this area? Now, what this article doesn't talk about is the areas that we've been looking at, the regional markets. Most regional markets, and you can ask anyone, if you're someone who owns properties outside of a major capital city, comment down below because people need to know this. It's not just my voice that's coming out. Let's help each other as a community. So if you do have a property, put it down in the comments down below, or you know someone that's got property. What has happened to their rents? Has it gone up? Has it gone down? Put a location there, and we can start having a discussion around this because it really is important that we share that knowledge. That's why I'm here, is we need to know this. As a community, we need to understand what sort of options we have, what sort of opportunities we have, and that's purely why you should subscribe to the channel and keep up to date with all the videos I've been making. Now, if you're new to the channel, you've come, sort of discovered it because the YouTube algorithm's doing its thing, in the recent sort of months, go check out what I was saying 6 months ago. It's not a big, I told you so. It's about going, okay, understand the fundamentals, because I was making videos back then that no one was watching, right? 30, 40-minute videos where you really get broken down into understanding why things are happening. It's cause and effect. We need to look at cash flow. We need to look at capital growth. But in this market, if you're navigating yourself through this property market, you need to be careful, tread carefully. And if you need the expert help, then you need to reach out. Whether that's us as a buyer's agent, whether that's your mortgage broker, accountant, whether that's other buyer's agents, you need to get the right people in place and you need to get educated, because if you understand why you're doing certain things, then you're able to actually execute properly. Now, I'm not saying, you guys are uneducated and that's why you should get educated. No, I'm not saying that, and I mean no offense by it. What I'm saying is that you need to get educated about this space. The market is moving very quickly, and it's not just about going, oh, well, I heard something, or I read something. Ask questions, deep dive into it. I'm here to help with my videos. I reply to every single comment. So definitely leave your thoughts down below. I would love to know what your thoughts are on this Australian market. And of course, what sort of help, what sort of more videos you want to watch and get educated about the space. A bit of a long video, but I really did want to help, in a time where I've been asked so many times, whether it's in private Facebook groups, whether that's in, the private student online course groups, whether that's emails. People are asking, how do I navigate this, Ravi? I don't know what to do. I'm frustrated. I feel like I'm missing out. What do I do here? And that's why I say, look, my YouTube videos are here to help at scale, but I respond, right? It may take me a few days on the emails, but I will respond. If you're commenting down below, I'm replying to every single comment. Let's grow this community. Let's collectively take advantage of this opportunity that's, presented to us and actually make huge steps towards financial freedom and building wealth together. I thank you guys so much for watching another episode. If you haven't already, smash that red button that says subscribe. Drop me a like if you enjoyed this sort of content, and go back to the older videos, check them out. There's playlists on this channel that's really going to help you get set up. And if you need extra help, go and sign up to the online course. Guys, there is so much information there. I promise you, you are going to get so much benefit and so much value from that. So please go do that. There's a link in the description below. I'll catch you guys in the next video. Thanks, guys.